there. Oh, 7 p.m. on 2nd Jan, is that a valid demand zone? I will come to that. I'll look at New Zealand US dollar, then I'll come to that. And then Chris, where price touches a zone but goes slightly beyond for a confirmation candle like this one here, is that still valid? So when you say like this one here, which pair were you referring to? Okay, yeah, if you remember which pair it was, Chris, more than happy to go back to it. New Zealand US dollar, this is a good example. We had balance, imbalance down, touch, rejection, targeting those lows, and now we would be waiting patiently for a retracement back to the supply zone. So it's a similar chart to what we just saw with Australian US dollar. If we see a strong rejection at that supply zone with New Zealand US dollar, and we see the same rejection at the Australian US dollar, what would we do in this scenario? And this is just a question I'm throwing out there. So we've got price coming back to New Zealand US dollar. Let's just assume we see price come all the way back to this supply zone on 7th of Jan, so tomorrow. We then see a confirmation candle. We see exactly the same on Australian. We see exactly the same on Australian US dollar, 7th of Jan. So we see that tomorrow, confirmation. Do we take a short opportunity on both those trades? Do we favor one over the other? What would come into your mind if you're looking at those two charts? Which one would you favor? Would you look at both? If so, why would you look at both? Because remember, we are looking at Australian dollar, New Zealand dollar. They are correlated, or they're closely affiliated pairs. Yeah, and that's just the general vibe. It's about splitting risk. So 1% is a general rule. In an example like this, if there aren't any other trades, let's say 0.5% on each of those setups. And then also going back to high impact news events, like I mentioned, we've got CPI coming out from Australia. I don't think we've got any high impact news events coming out from New Zealand. So New Zealand US dollar might be more favorable because you don't have inflationary figures to contend with. So you may say to yourself, okay, even if I do get a strong rejection there, I may go 0.75 New Zealand US dollar, 0.25 Australian US dollar, then reassess before CPI comes along, potentially close that trade. But yeah, there's loads of different scenarios to bear in mind. But the key point I'm trying to get there is managing your risk, never risking more than you should be when you are trading affiliated pairs. If it's Australian dollar, US dollar, and New Zealand US dollar. If you look at Euro US dollar as well, so you're saying Euro, a potential supply zone. So you've got here balance, bullish candle. Is this the potential supply zone you're looking at? If I just draw that for now. Equal lows broken. Oh, sorry, you said 7 p.m. a little later. Yeah, so you have balance, imbalance down. You then come back into that zone. So then you see you don't really see a strong confirmation. You actually have, you do have an engulfing candle there. It's not really a strong confirmation. It's not a 3-candle swing. Yeah, it's not showing me strong intent from sellers. Despite the initial supply zone, that is a good area of supply. Price making new lows. If we look at the weekly, yes, very much bearish overall. We are getting closer and closer to getting close to parity, and now we're coming back to a more premium level of supply, which is actually a weaker supply zone because it didn't actually make new lows there.